In today's video, with the market close to all-time highs, I'll be getting into all of the major US indexes. I'll be getting into a bunch of great looking trade ideas and some really top companies. I'll be guiding you through all of the key market price levels, and I'll also get into volatility and also my best charts for when to get defensive. If you followed the channel closely this year, we've been covering some of the biggest performers in the market so far in 2026. ARM, Dell, AMD, Nebius, Terawulf, just to name a few. And hopefully I'll add a few more of those big hitters over the coming months. If you're new to the channel, I'm a verified and transparent Tier 1 professional analyst, former Deloitte hostage, so I'm sure you'll get a ton of value from today's video that you just won't find anywhere else. And as always, I hope the Scottish accent isn't too difficult for you. But let's start off with the S&P 500 and a detailed outlook. Now, seasonality so far for the month of June is currently showing that we're down around 3% so far. At the index level, I'm sure you've noticed it as well. Very, very choppy. Lots of areas going up, also lots of areas going down. Now, we are coming into traditionally strong period, July, so the hope is that seasonality can kick in. But for me, it's much more important to pay attention to the key price levels in the major indexes. Now, the market is pushing against all-time highs. Now, again, a big part of my work is understanding, does the market still have room to run? Now, just looking at the breadth data down here, this is the percentage of stocks within the S&P 500 that are making new 6-month highs. Now, currently we're around 6.75%. Now, historically, we've been much higher than that. So I think there's been quite a narrow leadership in the market over the last 6 months. I'm sure we all notice it, and we've all enjoyed it in our portfolios, the AI trade, the tech trade. We are now starting to see little mini rotations in there, but the daily time frame, I am currently viewing the S&P 500 chart as a bit of a base. We are below a rising 50-day moving average, so that is a little bit of a headache for me going into the next few weeks. That said, the triple Qs are currently range bound at the moment. I think given the strength of the run that we've had since the lows last year, it makes a lot of sense for me to anticipate and to expect a little bit of digestion of gains. A lot of those mega cap big hitters and semiconductors are now again starting to take a little bit of a back seat. It's all very normal, very logical. I think it's a massive opportunity to reload again. However, I do have to be very, very aware of the key price levels in the major indexes. And if we start to kind of get meaningful breaks below key pivot levels, then that would be a signal for me to perhaps look to maybe generate more cash, get defensive positioning, etc. The Dow Jones Industrial Average, however, I'm hoping, and I do feel that it is probably the leading chart at the moment. It's making new all-time highs at the moment. And again, if the Dow is making new all-time highs, it's very difficult to be outright bearish on the market. I think if the Dow was to put in a failed breakout, then certainly that would be, again, another very valid signal to potentially get defensive. But again, the NYSE Composite is pushing against new all-time highs. We've got the Russell 3000, again, very, very close to new all-time highs as well. But I think the pleasing thing from my perspective is a lot of the risk-on areas of the market, the Russell 2000s of the world, making new all-time highs. So the hope is that we can continue to move higher. Yes, there will be speed bumps along the way. You know, if you're investing in small caps, I think it's obviously, you know, widely accepted that you need to be very, very comfortable with the volatility of going up and down 10, 20% every other week. But the the chart for the time being, the levels that I'm working with for targets are up around 330. The micro caps as well, I'm still hoping to see that kind of 200 level come into play. We did have a little bit of a spike in the volatility over the last couple of weeks. However, we are still looking for stocks to buy. We're in the green zone. We're not remotely close to complacency. When you get those spikes above 20, my natural inclination is to just stand back, observe, not make any rash decisions. Obviously, when you get those spikes in the VIX, when you get above 30, you need to start looking at things from a buying perspective, and certainly above 50 is a capitulation signal. And hopefully, if you followed the channel over the last few years, hopefully you've learned that when the VIX is above 50, you start to look for the capitulation type of entries. But the US dollar index is a big component of my work. Now, over the last couple of weeks, it's not escaped my attention that the US dollar index has technically broken out of a little 12-month base here. And since then, stocks, certainly in the mega cap tech space, have come under a little bit of pressure. Now, again, not making any massive predictions with this chart. As we can see from the chart, historically, it's been a massive nothing burger, massive sideways range. So whilst it is breaking out of a 12-month base, that doesn't automatically mean it's about to rip higher. It's within the context of our overall sideways range. So there is every expectation that this could continue to move sideways and stocks could still, in theory, continue to move higher. But I am very, very aware of the correlation. This is the US dollar index at the bottom, and this is the S&P 500 at all-time highs as well. So hopefully the chart can show that there is a bit of an inverse correlation, which is why I am a little bit on edge, a little bit with the US dollar at the moment. But for the time being, my own approach, the approach that I have with my clients, is to just treat each chart on its own individual merits. Try not to overthink correlations too much, because I think you can then get into the kind of the paralysis side of things as well. But for me, 30-year note, I'm very, very happy to see it kind of fall away a little bit here. The 10-year note, now just to explain this chart for those of you that are perhaps new, not really aware, but there's a very strong correlation with energy with the 10-year note. So what I've done here, the XLE has obviously been making new all-time highs. However, the thesis and what I've been working with loosely over the last few weeks is that energy would start to roll over as soon as we kind of start to see, words like ceasefire, etc. Now, listen, I get it. There's a lot of shenanigans going on with the US administration, etc., and lots of back and forth, lots of, you could call it manipulation, whatever you want. But for me, what the charts are slowly starting to signal is that energy is potentially starting to roll over a little bit. I think most of us would prefer energy to roll over. I don't think we all like paying the high gas prices. So let's see how things develop with energy over the next few weeks. Hopefully, like I said, hopefully rates can continue to come down. Now, I am about to get into 20 top trade ideas. If you followed the channel a while, you know the drill. Please do smash the like button. If you're new to the channel, consider subscribing and also following on social media. Now, I will also be covering some of your requests from last month. So if you have any stocks that you'd like me to cover next month, just drop some tickers in the comments. Let me know why you like the stock. I will try to respond to every single comment, and of course I will add it to my watch lists for next month with a view to covering your stock for you. But I think where I would like to start is perhaps with some of the growth areas of the market. Cipher mining, massive performer over the last 18 months, call it. It has broken out of a 9-month base. There has been a little bit of chop over the last week, which is very normal for a stock like this. So I think as long as we're holding above this 25 level, I think Cipher mining, I think you can continue to remain bullish on it. Now, Nebius Group as well. Now, again, a lot of the data center names, the AI trade, etc., the wheels have fallen off a little bit. But like I said, I do feel that it's an opportunity to potentially load the boat a little bit. And I'm just using really basic technical tools, basic support and resistance levels. If you're new to technical analysis, you really don't have to overcomplicate it, folks. I see lots of charts on social media with too many lines, too complicated. Just to explain this is just a really basic risk management tool, the 5-week moving average. Some of you might use a 20-day moving average. And I think as long as you're above a rising 5-week moving average on any stock, generally it's okay. Yeah, so we're still looking at this opportunity here. I think as long as you're holding above 230, then I think it's fair game for the dip. But again, I think the concern would be if we start to see the Qs roll over a little bit, then that might not necessarily equate to stocks like Nebius continuing to move higher. So whilst I am remaining bullish on Nebius, I am very aware of the key levels for me. Obviously, if you're dollar cost averaging and you're investing, that's a completely different game. But for me, as a risk manager, these are the levels that I'm working with at the moment with Nebius. Now, I wanted to bring Netflix into the fold this month. It is actually a request that I'm responding to from the comments last month, but it's also a chart that I prepared for our clients in our Wednesday halftime report. Now, again, for those of you that follow the channel, you know that I always look at the mega cap tech names as buy low, sell high opportunities when the opportunity presents itself. Now, I am looking at this historic support level dating back to 2021. Now, Netflix has, of course, been beaten to death over the last 3 months. And we've pulled back into these key levels. So I think I would deem this to be the deep value technical level, which is the 50-month moving average. So I think as long as we're holding above that 50-month moving average, above that $70 level, then I think Netflix might be one where you might want to consider nibbling a little bit. Obviously, the danger with these types of charts is that they keep going lower. Right? So for me, it's very straightforward. Using the $70 level here as a risk management level makes a whole lot of sense for me. Now, Iren Limited, again, it's in the bucket that's been beaten up a little bit over the last few weeks. That hasn't changed the chart. I think the chart is in an accumulation phase at the moment. I think very straightforward and textbook 9-month base that's developing. Some of you that like the chart patterns might be looking at this as a cup and handle pattern that's developing. The problem is, and let me just say this as well, is a lot of folks say cup and handle pattern, but the reality is this could put in a double bottom. This could keep going lower to $30 before it actually confirms a chart pattern. So the level for me here would be up around 72, but I do feel that we are in an accumulation phase for the time being with Iren, and obviously if it does get that breakout, it's probably going to explode given the social media hype behind it. But again, I think it's definitely worth adding to your watch lists for the month of July. Also going to add in Terawulf. Again, really basic trend following system, 10-week moving average for this particular chart and stock. For us, the alert that we have remains intact. Very happy with it and how it's been performing. Again, a little bit of a headache over the last week, and I'm sure we all feel it. But again, the longer term trend for us still remains higher, hopefully. But just to re-emphasize as well, it's the 10-week moving average there that we're using for risk management. Another one that I think is in an accumulation phase at the moment is SoFi. I think this is a very, very textbook looking 4-month base. Again, if you're looking at chart patterns, you could maybe see a double bottom start to develop there. So I think if there's a breakout there above 20, then again, it's one of those momentum names. There's a healthy short interest behind SoFi as well. Could potentially fuel it to move higher. Now, I had a lot of questions on Nokia. I actually covered this one last month. It got off to a really great start. I was really happy with it. But since then, we've obviously started to develop, what do you call that? A head and shoulders pattern, sorry. And something that I've become very, very aware of over the years is that good stocks over time tend to go up. Oftentimes, a lot of folks fall into the trap, and especially in bull markets where you see these bearish chart patterns, potential tops, and you jump in, you short the stock, and then all of a sudden it just does that about turn, and then it just rips the faces off of the new shorts. That's something that I'm looking at with Nokia. Now, I've got a pretty substantial position in Nokia, just for disclosure. So for me, I'm still holding it. I'm not freaking out too much over this. It's obviously a little bit of a headache for me, and let me also just say as well that if there is follow through with volume on this next week, over the next couple of weeks, then I will more than likely exit my own position and recover whatever I can. But for the time being, still okay with the chart. A little bit of a headache, but I am looking at this and hoping, let me just say that, hoping for a reversal higher. So I'm looking for this to be some kind of bear trap with a face-ripping rally over the next couple of weeks. So let's see how this chart develops. We've got Microsoft. Again, for those of you that follow me on Twitter, you'll know that yesterday or 2 days ago, I posted the chart for Microsoft, just basically saying this is a level you want to pay attention to. Are you buying down here? It looks like today buyers have stepped in at logical levels, something I have been anticipating. That said, but when you get these rebounds from logical levels, it's oftentimes very, very difficult to gauge whether or not it's the actual bottom or whether or not it's just some kind of oversold rebound rally followed by continued selling pressure. Now, from a professional standpoint, it's something that obviously I work with our clients on, is you never know. I think that's maybe the one thing to take from this. You never know. But the one thing that you can control is, one, you can control the entry, and you can also control the out. So what I always say to our clients when we get to these levels is, look for that pin candle. You're looking for that, buyers to step in, so that you can define the risk against the recent lows. So what does that look like? Well, very, very straightforward. It just means that if you've bought the recent lows, you're just using that low as a stop loss level. If it does have any kind of excursion under, then your thesis is invalidated. But if there's follow through on this next week, Monday, Tuesday, then I think there is a very logical tradable low for Microsoft. But I think given software and the way things have been with software, if you picked up my analysis last month, you'll know that I was loosely working with some kind of rotation thesis with some of the software names. Now, we did get a big, massive rally in a lot of individual software names, but that rally was sold off very, very quickly. So I do feel like you need to have a bit of nimble footwork, especially with software at the moment. But Dell, I think, is still in a little bit of an accumulation phase. Again, it's been a monster performer. If you've been following the channel a while, you'll know that I've been covering this chart for Dell for many, many months. It continues to be the gift that keeps on giving. It's pulled into its 5-week moving average. So the hope is that we can get some kind of move over the next few weeks. How long can it go sideways for? Who knows? But if we do start to take out those recent highs, bear in mind with Dell, the market cap is only around 260 billion. It's got monster earnings growth. So again, let's see how this chart moves over the next few weeks. And also, if it does start to break below key levels again, that's probably in an environment where we're starting to see a little bit more selling pressure with technology and with the broader market. Another name that I think is worth keeping an eye on is Novo Nordisk. Now, I'm not massive on the weight loss pills. If you follow me again on Twitter, you'll know that I'm much more into fitness, CrossFit, Ironman training, etc. But there's obviously a healthy appetite for what Novo Nordisk provide. Now, it's not for me to question that. My clients expect me to just objectively assess the chart, which is what I'm doing at the moment. For me, from a professional standpoint, it looks like it's putting in a bit of a tradable bottom here. Bit of a swing style idea, if that's your thing. Could it turn into something more meaningful? Of course. But since it kind of put in that massive top in June 2024, it's just been beaten to death. Since then, you get these little trades here and there. So this is one that I think might be a little trade, if that's your thing. Now, another one that I wanted to bring into focus is Amazon. Now, again, I guess going back to what I was saying about the mega cap tech names, and when you get these big declines, I do personally feel that they offer opportunity. I much prefer Amazon, Apple, Netflix, Microsoft. I much prefer those stocks when they're lower. I'm sure most of you are in the same camp. I just can't bring myself to buy breakouts when they go out to new all-time highs. I almost entirely expect failed breakouts at this point, just in general. So I am looking at Amazon again. If it does continue to move lower, I probably don't expect it to get as low as 200, to be honest. But if it does get that low, then that's a stock that I would be looking to buy on a deeper pullback. So again, if Amazon is going to keep pulling in here, I think around 200 might be a level to consider. Another request from last month that I really like the look of the channel. I actually like the company as well, with Targa Resources. It's a stock that's been very, very kind in the past. For me, it looks like it's breaking above Fibonacci levels. Looks like it's going to go out at new closing monthly all-time highs. It's not actual all-time highs. I think up around 280 is the highs from last month. But if it can continue to move, get that breakout to new highs, then I don't see any reason why it might not get up to around 400. Now, some news has hit the tape with Credo technology in the last couple of hours. Now, I've picked up a comment just from social media saying that Credo technology has been removed from the Russell 2000 and it's going into the Russell 1000. Don't know if that's accurate yet, but it's a headache for sure. Just for disclosure, it's a stock I've got a position in. So I'm just trying now to work with systematic process. It's obviously a bit of a headache. Don't know really what's going to happen next week with it. I am always generally, tempted to kind of look at it through the lens of the market's really just trying to shake out the position. But again, it's one that I'll have closer risk management on next week. But again, not going to overthink it this weekend. I'll just wait and see what the market decides to throw next week. Now, AMD is a stock that I've been covering on the channel for a while. Now, lots of questions on this because A lot of you are wondering about upside targets. Now, I actually had a thesis around a year ago where I posted it to social media saying that AMD is going to be the next trillion-dollar company. Now, since then, there's obviously been a few stocks that have got there before AMD, but the targets that we're still working with there are up around 650. It has been a very, very choppy month, I think, for semiconductors so far, just generally, but AMD is holding up. It is currently positive on the month. So I'm looking at these targets up around 650-ish as a potential level. The reason that I'm using those levels is that these are Fibonacci levels, and I can see historically on the chart that these Fibonacci levels have had historical merit in the past. If they've had historical merit in the past, reasonable to expect that they hold in the future as well. Now, another one that I want to bring into focus is Allstate Corp. Now, this might be a new company for many of you, insurance. I think those of you in the US are probably more familiar with it than those of us in the UK, Scotland. But for me, that's a pretty textbook breakout that we've had this week. It was actually one of the charts presented to our clients last weekend, and it's done its thing this week, and it's off to a good start. So I think Allstate Corp, there's obviously reasonable valuations to be had there. There's decent earnings growth. So, you know, for those of you that are maybe looking for exposure away from technology, for example, don't forget slow and steady wins the race is always an approach as well. Another one is UnitedHealth Group. Now again, going back to the buying, top stocks when they're on big discounts. Now, our clients, or not our clients, I would say a few of our clients have been accumulating in here and are being rewarded. If you are a breakout trader, that looks like a pretty healthy, convincing move over the last few weeks. So I think certainly UnitedHealth Group might be worth adding to your watch lists. Now, we've also got Intel Corp. Now, again, it's been a long-term chart of ours. It's performing very, very well. I'm sure many of you watching have got positions in Intel as well. But I thought it was going to confirm another breakout to new highs over the last few days. That hasn't quite materialized quite just yet. But potentially, if it can get another breakout, we are still potentially looking at upside objectives to aim for. Obviously, there's a lot of hype behind Intel. It's had an astronomical run. I mean, that's a crazy run. How much more does it have left in the tank? Again, we'll need to see. Now, another one that I'm thinking not many of you are familiar with. Again, if you follow me on social media, you'll know that I posted this chart during the week, just for Lifetime Group holdings. Again, very, very textbook, 12-month base. I think it's been tightening up over the last few weeks. It's had a big spike in volume over the last week as well. So potentially, again, reasonable PE ratios, decent earnings growth, etc. So again, Lifetime Group might be something to consider. Now, another request from last month that looked quite interesting to me is Vistra Energy. Now, again, reasonable PEs. Market cap is only 4 billion. This is pretty much what I like. I like to see these healthy consolidations. It's a 4-month base that's building. It's at the low end of the risk range for the base. So, if you are looking to accumulate in here, there is a very easy out. If we start to break back into the box there, then that would be a problem. But it was actually a stock that I liked a few months ago, but I actually removed it from our chart book because of the sideways range. Just got frustrating when everything else was ripping higher. So I think if you are in the camp that you're bullish Vistra Energy, then again, you can define the risk. There is obviously healthy upside if it can finally get that breakout of that range up around 82, 83 bucks. And also another one that I've been covering on the channel a while is Astera Labs. Now, it's actually just met our upside targets here. So The 5 week moving average is still technically intact. So absolutely, I think if you're still holding Astera Labs, again, I've been covering it on the channel, I've been covering it on social media, right, since the exact bottom in April last year. It's just been on an absolute tear. So again, remain bullish Astera Labs, 5 week moving average. If it can break out above these next Fibonacci levels, then there are some logical levels to aim for. But again, we'll just need to wait and see how things develop there. But if you're still here and you're wondering what it is I do, who it is I am, there's a link in the description for our website at honeystocks.com. If you'd like daily access to a professional tier 1 analyst with a top track record, I'd encourage you to check out all of our transparent, time-stamped work on our website. If you are a trader, an investor, a money manager or a financial advisor, my work is likely a good fit for you. We provide memberships to all of our premium work, which includes our complete market breakdown and trade ideas that go out every single weekend, all of our highest conviction investment ideas. I'll show you what that looks like in just a little second. Our bite-sized midweek halftime report updates and a few more trade ideas. You'll also have access to a wonderful, intelligent community of professionals, investors, and traders from all across the world. You have complete access to all of our chart books, which includes all of our trade ideas, ETFs, and commodities. And if you're new to technical analysis, you also have access to our complete technical analysis program, which will show you how to read the stock market and also build a process that's unique to you so that you can stand on your own 2 feet. Now, to show you what our time-stamped highest conviction ideas look like, here's a few of our very, very recent ideas that have gone out to our clients and members over the last few months. As you can see, the charts are very clear, very, very easy to understand, have very simple instructions on how you can approach our best ideas. But I am very, very unique in what I do. I publish on our website the performance of every single one of our highest conviction best ideas that has gone out to our clients since 2018. So if you are considering accessing our work, please do make sure the types of ideas that I generate are the types of ideas that you like to buy. It's always high quality stocks with very solid fundamentals, and there is a risk to reward proposition as well. I think generally my work is a good fit if you have a mid-term approach, if you're looking, a few weeks to a few months out. I think if you're someone who keeps getting shaken out by market news, making impulsive decisions at market tops, market bottoms, etc. If you keep getting confused by all the different market analyst opinions, if you're maybe too busy with work, life, business, etc. to find the best stocks and the best charts, then maybe my work is a good fit if you do want to be part of a community and you're sick of hunting around social media. So if you have stuck here to the end, as always, thank you very much for watching, and I hope to welcome you soon. Thanks very much.